Hello and welcome back to the program. Let's get right into what happened overnight in the markets. The three major U.S. indices finished essentially flat yesterday. The Dow closed at 53,569, the S&P at 7,730.99, and the Nasdaq at 26,541. But the pre-market futures are pointing slightly higher across the board this morning. Nasdaq futures are up about 0.16%, S&P futures up 0.22%, and Dow futures up 0.13%. So the overall sentiment from overseas is moderately positive. On the individual stock level, Nvidia is trading at $227.98, up about 0.81%. But there's a claim floating around that it's gained 8.74% over the last 24 hours, and we have not been able to verify that with any independent sources, so we're treating that with caution. We're also seeing some software names with big two-day gains. Okta is up 28.63%, Salesforce up 22.58%, CrowdStrike up 20.5%, Synopsys up 13.39%, Palo Alto Networks up 12.83%, and ServiceNow up 10.04%. But again, none of these numbers have been confirmed by independent sources, so they're not going to be the basis for our strategy today. The priority for today's session is to verify whether these Nvidia and software sector moves are real. Now let's look at the broader macro picture. The 10-year Treasury yield is at 4.68%, up slightly from the previous day. It had fallen about 1.22% over the prior 7 sessions, but today we're seeing signs of stabilization. If it breaks back above 4.7%, that could tighten global liquidity expectations again and put pressure on high valuation assets. The VIX is at 14.44, below 15, which tells us we're in the greed zone. There's no panic in the market. The dollar index is at 99.19, staying weak, which is supportive for emerging market assets. WTI crude is at $82.30 a barrel, down 0.84%, and that pullback in oil prices helps ease imported inflation pressure. Spot gold is at $4,653.40, up 0.47%, holding firm at high levels with both safe haven and de-dollarization demand in play. So to sum it up, the global market is currently in risk-on mode. But the conditions that would invalidate this view are the VIX breaking above 16, or the 10-year yield rising above 4.7%. On the RMB front, the onshore rate is at 6.7097, appreciating about 0.17%. The offshore rate is at 6.7218, and the spread between the two is narrowing, so the currency is stable overall. A weak dollar combined with a strengthening RMB is favorable for foreign capital flowing into shares. On the trade and technology friction front, we did a thorough search and found no new verified events. Our call for today's A-share open is a flat to slightly higher start. The supporting factors are warm overseas futures, a low VIX, and RMB appreciation. The constraining factor is that the Chi-Next board fell 1.41% yesterday, so internal risk appetite is still contracting, which means the upside gap will likely be limited. The conditions that would invalidate this view are Nasdaq futures turning lower before the open, or the offshore RMB weakening past 6.73. Now for today's A-share strategy. On the index side, the Shanghai Composite is likely to trade with a positive bias in a range. The Shanghai Index closed yesterday at 3,952.18. The Chi-Next may see a technical bounce after its recent pullback, but it's hard to call that a trend reversal. If the Shanghai Index breaks below 3,940 and can't recover within 30 minutes, that's a warning sign. In terms of sectors, we're focusing on power equipment and the power grid. The logic there is that data center electricity demand keeps growing, the sector has high visibility, and the catch-up trade in related overseas names also points to demand for data center transformers. The other direction we like is high dividend defensive names. With the Chi-Next selling off and risk appetite shrinking, low volatility assets are more attractive to capital. What we want to avoid are the high-flying AI compute and optical module names. The Chinex's 1.41% drop yesterday shows money is leaving high valuation growth names, and the 10-year yield at 4.68% is capping valuation upside. Also, falling oil prices put pressure on the petrochemical sector. On northbound flows, with RMB appreciation and a low VIX, the probability of net inflows is slightly higher than net outflows. Watch whether northbound capital is in net buying mode in the first 30 minutes of trading, and whether the offshore RMB can hold around 6.72. On the stock radar, we have Okta as a candidate, biased to the upside with about 55% probability over the next 1 to 3 sessions. The trigger is continued strength in cloud security demand logic. It's invalidated if it breaks below the day's low or the broader market turns weak. Position discipline is to watch but not chase, and wait for data confirmation before considering entry. For existing positions, we're looking at Coherent as a hold and monitor situation, about 52% probability over the next 1 to 5 sessions. The catch-up progress is 65.3%, up 18.6% for the month, but insider selling suggests valuation pressure. The discipline here is to take profits in batches and not add new positions. On the avoid list, AXT has reached 100% catch-up progress, up 42.56% for the month, with a PEG ratio around 12 times, which is severely overvalued and carries high geopolitical risk. We suggest taking profits and exiting. If you don't hold it, stay away and don't participate in any bounce. Yesterday's weak market candidate list was empty, so today is mainly about position management and risk control. Here's the bottom line. A weak dollar and low VIX are providing a supportive backdrop, RMB appreciation is supporting foreign capital inflows, and the shares should trade with a positive bias. Power equipment and high dividend names are the preferred sectors. Today's probability call is 35% for an up day, 45% for a sideways day, and 20% for a down day. That's all for today. Thanks for watching, and we'll see you next time.